Let's address the elephant in the room. The biggest myth out there is that being self-employed is a mortgage barrier. Rob, is that true?
Of course not. The barrier to getting a mortgage, be you're self-employed or employed, is the lender you go to. If you go to the correct lender, then you'll get the correct mortgage. If you go to the incorrect lender, you won't. And it's irrelevant being employed or self-employed.
This is the thing that gets so many people. It got me, because I've obviously had a number of businesses and I've been rejected, and it's the norm. It's what you expect to have happen. You've been with this bank since university or college or straight out of school, and they've known you for 30 odd years, and you're finally in a position to go and get that lovely property you want to get, but you're self-employed. I'm saying, but I think it's a positive. You got your own small business. Everything's going great. You go to your own bank. And then you go through this massive, long, elongated process and they say no. Why? Why the hell would they say no to you?
To get a mortgage as a self-employed person, you need to go to a bank who understands how your income is generated and how your income is proven. Your bank are unlikely to be the right people for that. Very rarely, very rarely. The myth is that even if you can get a mortgage, you might not be able to borrow as much. Well, actually, the exact reverse is true. So if you're a contractor, as an example, and you may be working on a short-term contract, you may have, for instance, a 3-month contract, but your history shows that you're a contract worker. You've been doing this for a while. Maybe you've been a contract worker for a year or a couple of years even. So, there's history that you get contracts and you get more contracts. What lenders will do, what the correct lender will do, they'll take your contract value, your existing contract value, they'll annualize it. They'll assume it's an annual contract, even though it's only a 3-month contract and there's no guarantee you'll get an extension. They'll annualize your contract you're on now, and then they'll apply the normal income multiples, as if you're anyone. At the moment, the income multiples sit comfortably at 4.5 times your income. 5 isn't out the question for a good clean case. So you got a 3-month contract, times that by 12, times that by 5. And then that's how much you can borrow. And we've seen numerous cases where people have come to us with the assumption that they may be able to borrow 300,000, 350,000. And then we're looking at their contract and we can say, well, actually, you can borrow 700,000 if you want to.
Let's break this down. I'm self-employed. I've got my small business. I want to buy this house. Let's go through step by step. What's the first thing I should do?
Speak to your specialist mortgage broker. And as you said, this is not a sales pitch.
No.
Speak to your specialist broker first. Before you decide to go, there's nothing worse than going shopping, looking at properties, and then finding out you can't. Speak to your broker first, find out what you can borrow. There may be a case whereby you can't get a mortgage because there may be something on your credit file which stops that. But that doesn't mean you can't get one. It means you can't get one now. What it means is our brokers will therefore say, this is what you need to do to enable you to tidy up that credit reference. So no doesn't mean never. It just means it may not be now. However, equally, quick call with one of the brokers, and you may find that instantly you can get a mortgage at a higher amount you thought and at a less cost. Speak to the broker day one before you go shopping, before you look, before you get excited. Speak to us and find out what you can do.
Yeah. What is the step 2? It's all about this income you talk about.
Yeah. So step 2. So we've spoken to you. We've said to you, if everything you've told us is correct, we now need to prove it. So step 2 is they're now saying to you, we now need your proof of income. But again, your proof of income isn't hard to get, especially if you're a Crunch client. Let's be clear on that. Because Crunch are used to providing income to their clients, showing that. But it's your SA 302s, your last accounts. You may find that you want 2 or 3 years accounts because over an average over the period, you show more. You may find that your last year's accounts were so strong, you just want to show them. Again, by giving us the information we need, we can decide which way to show and who to show and how. But it's a basic contacting your accountant, getting your proof of income, which again, very simple to do, not hard to do, can be emailed across to us.
What you need is, speaking plainly, it's the self-assessment, the SA 302, your last accounts, and maybe further back. Maybe it could be up to 3 years.
Yes.
What happens if you've kind of just started and haven't even completed year one? What's the situation there?
Well, then obviously we can get an accountant's reference to show where you are at that moment. Plus, we can also get your management statistics, which if you're running a business, you should have. You should know what your expenses are and what your income is. So again, you can get us that information and we can work off that.
The next thing for limited company owners, and this again is a big learning ground for me when we were speaking, and I thought I knew this, is the dividends. Can you guide us through how the dividends count to your income?
Yeah, sure. Okay, I'll keep this very, very simple. As a self-employed person or as a limited company, however you trade, the fact that you've taken dividends or not taken dividends has zero bearing on what you can borrow. Full stop, the end. We don't care. Lenders don't care what dividends you've taken. The reason is this. What the lender wants to know is, what income did you take and what income could you have taken? That's it. So by declaring a dividend, and we've seen this numerous times where people have been advised that their income won't be big enough, so therefore they need to take a dividend to create a greater income. So they then take that dividend. They're then creating a tax bill, often a very large tax bill, which is unnecessary because the lender just needs to know that if you could have taken it, that it was there. The fact you chose not to, it's not the lender's position to tell you how to run your business. Again, it's not what they do. They just want to know, can you afford the mortgage? So if you're in your business, you could have taken more money, then you could afford the mortgage.
I think that piece of advice is so fundamental because the instinctive human nature is to max out your earnings, isn't it?
Yeah.
Take it all. And so many accountants get it wrong.
Yeah, they don't understand. They don't understand.
They want you to max out your thing. So they think you can get a higher multiple. But if you approach it as we are going step by step through this, then it actually delivers a far greater outcome, far beyond the normal calculations, if you do it properly.
Darren, let me take you back to point one, which was speak to your broker first. If you speak to your broker first, he will tell you don't need to take a dividend. If you speak to your accountant first or your neighbour first or your local publican first, they'll tell you do have to take a dividend. Speak to the broker first. They'll say, what's your income? How did you take it? What were your profits? Not what did you take? What were your profits? We'll guide you straight away on point one. Do not need to take a dividend.
There's so many people get that wrong. Right. Step 4 is about fixing your credit score. And it's a lot. Yeah. I obviously had a slight fly in the ointment. What's your advice on getting the credit score all beautifully laid out for this process? So,
certainly you want to have the first thing is have a credit score. What I mean by that is, we come across a number of people who say to us, I'm a fantastic risk because I've never had a credit card. I've never had a loan. I've never borrowed any money. Well, that's great. But how do I know you're a good risk then? How do I know you're going to pay something back if you can't prove that to me? A better risk, much better risk, is someone who's had a loan or had a credit card and has paid it back. Now that's a good risk. You've proven something. So if we come across people who don't have any loans or credit cards and never had, our suggestion isn't go take a loan now. I'm not suggesting that. But I'm definitely saying take a credit card and use the credit card regularly. Pay it off. Pay it off every month. If you pay it off in full every month, it won't cost you you have a whole month to pay it off. So you take a credit card out on the 5th of the month, you spend £100. At the 20th of the month, you pay it off. Now all of a sudden, you're on the credit score. It can see that somebody trusted you enough to lend you money. It showed that you spent it wisely, and it shows that you paid it off. All of a sudden, you've got a credit score. So again, the myth of never borrowing, that's probably one of the worst things you can do if you want to get a mortgage. So the first thing is that make sure, and again, talk to us and we'll explain that. The other thing is that we'll do a credit score on you. And that'll show us, as it did with you, Darren, if there is anything on them that shouldn't be on there. If that's the case, we then know how to help you work through that. Most of the times it's small little things that you can have removed, and we can show you how to do that. And it's very cheap, often costs nothing, and it's very easy to do. We can hold your hand and guide you through that. A good broker can do that. It's not hard. This is part of what the broker's job is. If, however, there's something on there that can't come, there is a true bad debt on there. Well, again, it doesn't mean you can't borrow money. It doesn't mean you can't get a mortgage. It just means you need a certain lender who may charge a bit more, may offer you to lend you a bit less. But there are lenders out there who will work with that, because we've all got a history. We've all got a past. Life doesn't run smoothly. It's just not how life is. So, you're not going to be punished forever for something that happened. What it means is we just have got to find the right lender for that. So make sure your credit, and the other thing I would say is, if you're going to take out a loan, say you want to buy a new car, it's a really good idea to talk to the broker first and say, I am thinking of getting, my car needs updating and I need to get a new car. The broker may say the lender we're going to, that's absolutely fine. But it may be that the lender you're going to, the income, the affordability is very tight. So you know what? Just wait till the mortgage has been offered, wait till the mortgage is completed, then you can go and get your car loan. So again, there's just steps of doing stuff.
What feels good is how many people we've helped that were absolutely beside themselves with worry, and we solved the problem with your expertise, and I think that's absolutely fantastic. So it's the right thing to do, to put the two businesses together and solve this real pain point in there. Crunch solved the pain point on accounting and tax from all of my years of having interesting experiences with traditional high street accountants to a service that was, simple, cost effective, but did the right thing and delivered perfect accounting and tax savings. And now we've got, we've had mortgages in there for I think it's 2015 and 2016.
Yeah, maybe
so before we reminisce any longer, but I'm really, really pleased. And it feels now the timing is good. We've gone through an interesting time. It's almost like the new norm is there with the house prices and the interest rates at the
Sure.
the level they are. They are going down. I'm not sure if they're going to go up.
Well, you know what? I think that they're not going to go up. They are going to go down a bit. But again, that isn't a time to wait. The difference between where they are now and where they're going to be, it's going to be pence, not pounds. It's really not going to make that much difference. And I think we're at a place now where we're going to be for a few years. And it has become far more affordable now than it has been in the last sort of 12, 18 months.